Hey, good morning. Well, it's 10 o'clock. So, you know what time it is? It is Coffee Chats with Candice. So, grab your cup of coffee or beverage of your choice. No judgment here. And that includes your finances. And let's chat. So, for those who don't know me, my name is Candice Montgomery, and I am the founder of Monetize Your Dream, a course for new and aspiring women business entrepreneurs, and Beginner's Guide to Budgeting. I help you learn how to budget so that you can pay off your debt, save money, and experience financial confidence. If you're new to me, I own 3 businesses with my husband. The first one we started in 1996, and it's now in its 27th year, which is surprising. So we paid off over $450,000 in 7 years' time. And since 2022, we have been completely debt-free in our business and in our personal lives. And I'm passionate about sharing budgeting and budgeting and business with you. All right, so today we're going to talk about a credit score. And we're talking about healthy financial habits. So that's been our theme for the last few weeks. So what is a credit score? Well, a credit score is a prediction of your credit behavior as how likely you are to pay back a loan on time. So while at this point, I don't think that a credit score is important because we don't have any debt, I feel like it's good to give y'all or give you the most information that I can. So credit companies use credit scores to make decisions on whether to offer you a mortgage, credit card, auto loan, other products, as well as for tenant screening and insurance. So when we leased out our house for a year to pay off all of our debt, that was one of the things that the property manager did, was they used a credit score in order to screen the tenant. So while you're working on paying off your debt and getting everything in order so that you can have financial confidence, your focus needs to be that you pay your bills and you pay them on time. Because it doesn't matter if you don't pay your bills on time, your credit score is not going to matter anyway because it's going to suck. So be aware of that. So if that is something that you're wanting to do and build and increase so that you can get a better interest rate, or so that you can purchase a home or credit limits or whatever, you need to focus on paying your bills on time. So that's the biggest thing. The other thing too is that credit card companies, or the credit companies, they look at, the biggest factor is your debt utilization, which means that how much debt you have to how much credit you have. And debt is the money that you owe, and credit is the money that you borrow to create the debt. So you want to focus on, like I said, paying the bills, but you also want to focus on not opening up more credit cards. And there's a sale that happens every time that you go to a department store or whatever kind of store, and you go to purchase something, and they're like, would you like to open a credit card? And you'll say 10% off. or 20% off. And when you do that, they are betting against you that you are going to not pay your bill because that's when they make the money. So they're not trying to save you anything, because what's going to happen, or what usually happens, and I would say, I don't know what the statistics are, but if I had to guess, I would say 9 times out of 10 or 8 times out of 10. When you do that credit card and they're like, oh, you can pay it off with the first bill. But when you do that and you get the first bill, you might not have the money that you had in your pocket when you were at that store to make that purchase. And then you can't pay the bill. And then what happens? Then you owe. Then now they've increased the interest to, 20% or more, 25%. And you are stuck paying that bill. And now you've just erased the discount that you had when you got the credit card. So don't fall into that trap. I was at a store, and I won't say what the name of the store was, but I was buying a bunch of clothes for buying it for? Oh, for the spa show that I was working. And so I didn't have any black clothes. So I had to buy a bunch of black clothes. And my bill was like $700. And I'm not saying that to make you feel bad or whatever. What I'm saying is that the lady standing next to me, who appeared to have more money than me or be more financially well off than me. And then the lady that was checking me out said, well, you could get a credit card and you could get 20% off this purchase right now. And I was like, no, thank you. I don't do that, because we are debt free. And I always feel like I have to explain that to people, because they're like, what? So I tell them that we're debt free and we don't do credit accounts. And so the lady next to me chimed in and said, I always just do it just to get the discount. Well, that's the way the majority of people are, is they get that to get the discount. So they think that they're going to beat the system. But the thing about it is the system is set up to make you fail, waiting for you to fail. So don't fall into that trap. And if you have the money to make the purchase, which is the reason why you're in the store, pay for it in cash, and then you own it. You don't have to take that home with you, and you don't have to pay that in a month from now or 6 months from now or a year from now, when you have overextended yourself and the money is not available. So I'm like, to me, that 10% or 20% discount is not important, because to me, being able to pay them with cash and say, thank you, have a great day, and then not have to worry about it. I don't have any baggage when I leave the store besides the bags that have my clothes in it. Then I don't have to stress about not having the $700 next month, or the $700 minus the 10%, $70, and have that $630 to pay. So just be mindful of that. Don't get sucked into that and be like, oh, I could get more if I do this. No, don't do that. So when you open those cards, though, the biggest thing is that the credit score that you're working so hard on takes a hit, because you're opening up more credit and you're giving yourself the opportunity to be more in debt. So that's how the credit card formulation works, is that you and I don't even pretend to know what their calculation is, so I'm not even gonna go there. But so when they calculate that, then they see, oh, well, you've got 10 credit cards and you've got 10 out of 10 at the 90% mark, where it means that you only have just a little bit of credit left on each one of those cards so that you can spend. So that looks like a risk to them. So they're going to say, oh no, well, she needs to have a higher percentage rate, an interest rate, whatever, or we are not going to give her credit because of this. So big things for your credit score is that the debt utilization, which means your credit to debt ratio, and if you pay your payments on time, is huge. So those two things are the most important if you're looking to work on your credit score and keep it healthy while you're in this process. So the other thing too is you want to cut up those cards. And I've mentioned that before, because if you cut up the cards, you can't use them again. However, if you leave them open, you cut them up, you're still paying for them, then you're still working on that credit so that you're using that to your advantage. And when I started my debt-free journey with my husband, I closed out all the credit cards that we had because we had multiple credit cards and a lot of them were sitting there with like zero balances. So I closed them, and then I had them send me a letter saying that the account was closed. When I went forward with that, then I did the gosh, I kind of just lost my train of thought. Just saying that I closed all the accounts. I asked them for a letter saying it was closed, and then on your credit report it'll say closed, account closed, or closed by I forget what the word is. It's not creditor. If it's closed by the creditor, that means that it's closed by who issued it, which would be Macy's or Dillard's or Best Buy or whatever. So when you close it yourself, it'll say that it's closed. So you want to have that record that you closed the account yourself, and that takes time. So when you close out credit card accounts, that's going to take your credit score is going to take a little bit of hit as well. So while you're paying off this debt, to keep your account, to keep your score up, to keep it from going down, cut up the cards so you can't use them, and then just pay off the bills and pay them on time. Pay at least the minimum on the lowest one. We've talked about that before, where you and the debt snowball is that you list your debts from largest to smallest. I'm sorry, smallest to largest. And then you pay the smallest one, you pay as much as you can at that, and then you pay the minimums to everything else. And then when you pay off that first one, it's giving you momentum. So that's why it's called a snowball. It's giving you momentum so that as it's rolling down the hill, it's picking up all the snow and or all the credit and eliminating it. So when you do that, I would say, and you can take my advice with a grain of salt, but I would say you could leave your card open as long as you cut it up. All right, so I've harped on that long enough. So the consequences of a low score, that was one of the things we talked about too in the email that was sent out, is that that could result in you paying a higher rate or not getting a loan. So if you're trying to accomplish something, whether it's purchase a car or purchase a home or something to that effect, and you need your credit score to be higher in order to be able to accomplish that, the biggest thing is to pay off the debt first. Don't get into more debt, because getting into more debt is just going to stop you from being able to move forward. And once you're debt-free, once you've paid off that debt, you don't owe anybody anything, and you can use your income to pay for things, and you will have more money than you realize that you have. Because what's happening is you pay out all these monthly bills to interest and late fees and the credit card companies when you instead could just be paying yourself. So, something to keep in mind. So you want to focus on not getting any more cards or loans and just pay what you have. The other thing I've said too is that just because you can afford the payment, which is it's common knowledge, just because you can afford the payment doesn't mean that you should get it. Doesn't mean that you can actually afford it. Just because you can make the payment doesn't mean you can afford it. So delay your purchases. And since I've started this process of going through and doing these coffee chats and thinking about things that my husband and I did as we were growing up, we've grown up together because we got married when I was 20 and he was 22. And so we did do that because, you know, I remember we our washing machine went out, and so we had to finance our washing machine with Montgomery Ward, which a lot of you won't know what that store is, but and I remember we had a $500 credit limit or something like that. It was ridiculous, but we had to do that because we didn't have a washer and dryer. Well, we didn't have to do that because that was how we were conditioned to learn how to purchase things. And if we would have, looking back at this new way of being able, well, actually, it's not a new way, it's the way our grandparents handled money. So if we went back and we handled that differently, if we would have saved that money rather than paying it to that, and then we could have gone to the laundromat, or we could have made other choices. We could have taken our laundry to our parents' house or something to get by instead of opening a credit card. There's all kinds of things that you can do to live within your means and not have to open up credit and owe somebody else. So, all right, so I'm going to stop harping on that too. All right, so I said earlier, I touched on it, is that your credit score is just how much debt you have. So when you buy something on credit, you don't own it, the bank owns it. So when you don't pay it, they can take it from you or sue you for the money that you owe them. So what kind of fun is that? One of the things that Dave Ramsey says is that your credit score is just your how much debt you have score. So, and that's exactly what it means, is that when you borrow, and the type of loan accounts that you have, how long you've had the available credit, how long you've had your loan accounts open, how much available credit you're using, any new applications for credit, because every new application that you have for credit is going to hit your credit score. And if you're turned down, then that's a negative mark. So there it goes. It's just making it go down. So that's not a good plan either. So, and then whether you've had debt sent to collection, foreclosure, or a bankruptcy, and how long ago. So to kind of go back to what I said in the beginning, is that you don't have to have a credit score in order to do a lot of things, but we have been brought up thinking that we need to, but we don't. So 62 million, or 11% of the US population, are credit invisible, with an additional 19.4 million having credit records that are unscorable. So this makes up 45 million, or almost 20% of the US population doesn't have a credit score, or that it's unscorable. So that's a lot. And you would think people don't have that. Well, if you don't need to use credit to purchase something, then you don't need a credit score. So again, Dave Ramsey talks about how what is it? So you can get mortgages that are that you don't have to have a credit score for. If you have 12 months of rental history, the rent, your utilities, those things go to increasing your credit score, or go to your credit. And then also student loans, which we're going to talk about student loans next week. But when you're my mind's just going blank. When you're trying to do that, you don't have to go out and get a credit card or a car loan or anything else in order to build your credit. So take that, and take the advice. Hold on to what you need. If you have questions about it, let me know. I am here to help. So when it comes to budgeting and paying off debt, I know where you are. I know how you feel because I've felt the same way. And I know it's confusing, and you think you're never going to be able to get your finances in order, but I can help you. So if you or someone you know needs help, send them my information. Let them know. I do one-on-one coaching, and I can help you out or help them out. So, and it's what I'm passionate about. I'm passionate, like I said, about business and budgeting, and it just lights me up because it becomes a game to me. So anyway, I hope that you found value in this information, and I hope that if you would please share, like, and comment on my post, on my videos, because your engagement helps get my message out to more people, and more people need to know. So I appreciate your time today, and sorry I went over. I always want to respect your time, but kind of had a lot of things to say. So I will see you next week, same time, same place, where we're going to talk about student loans, which I've never had a student loan, so I don't know about being in that position of having one. However, my husband had student loans when we first met, and I know a lot of people have student loans, and I know a lot of people are about to have to start paying in October. So that's what we're going to talk about, and the best way about going about it. So like I said, if you have any questions, I can answer for you. You have any input, I love to hear it. So please give me feedback. Shoot me a message, comment, share, like, heart my video. I would truly, truly appreciate it. So I hope you have a wonderful day. Oh, knock that over. Hope you have a wonderful day, a wonderful weekend. Oh, and you know what? Big news, people. Big news. We got rain this week. Pretty freaking amazing. So it's like 44 days without measurable rain here in DFW, but we got some rain the other day, which we're not close enough to the airport to get it, on record or whatever. But so excited because that made such a big difference. And so we just need more rain. So we got to do rain dances. We got to do praying for rain. So because we need it, we got holes and cracks in our yard that my small little dogs are going to start falling into. So anyway, all right. Well, I've enjoyed talking to you. I've enjoyed being here with you, and I hope you have done the same. And I will see you here next week, same time, same place at 10 o'clock on Facebook, Instagram, no, not Instagram, YouTube, and on my personal page. And what else? Same time, same place, all those places. Oh, your coffee, your drink, your little drink with the umbrella in it. And I will see you next week. Bye.